Hello, now that the US election is over and done with, I thought I'd get back into the swing of having a look at markets throughout the week. Now we've seen markets calm down at least a little bit. I thought we'd kick things off with gold. We had fresh all-time highs at the end of October. It's sold off since then, not quite by 10%, but a fairly sizable drop. And I wondered if this is an opportunity. So I thought, let's take a look at the markets, have a look at the price of gold, and also see about setting a trade up. Because I do wonder if this is a buy the dip opportunity for gold. So I'm going to set a trade up during this video with the account that I use for the YouTube videos. If you'd like to find out who I trade with, there are details in the description, or go to bit.ly/David Trade. To find out more about me, the newsletter I run, the WhatsApp group, if you go to the website, davidjonestrading.co.uk, all the details are there and the link is in the description as well. But without further ado, let's take a look at it. Let's take a look at gold, see what the opportunity is now and where it might go over the next few months. So here's the last 8.5 years or so for the gold price. Big old move. We can see the size of the move this year. Let's zoom in to what's been going on a bit more recently. So we had the old highs from August 2020. So just after, well, during COVID really, when all that was going on. So we had around about $2,075 an ounce. The price of gold just couldn't break it. And you can see it held the market down all the way until March of this year. And then in March we get the break. And since then, if we take it to the peak, the price of gold gained about $700 from that break. So more than a 30% move from the break in March. It was strong going into the US election. But since then, or actually just ahead of that, we have seen the market sell off. So I think it's an interesting one here as to whether, is this a buy the dip opportunity in gold, or actually have we seen the top for a while now and we'll see the market sell off. Let's take a look at the trend. So if I was looking at the latest bit of the trend over the last 12 months, this is the sort of thing I'd be looking at. We had this trend line that started October 2023. And the market has accelerated away from it. But I think in the great scheme of things, we still have higher highs and higher lows. What is perhaps of some concern is the fact the low before the breakout, the low before the latest all-time high, down around 2.6, so $2,600 an ounce. We did see the market sell off through that. So that could give cause for concern that we are seeing something of a loss of momentum. But for now, if I had to do a trade on gold, and I'll do a trade in a second, I'll set one up, I'd still much rather be a buyer than a seller. These old lows before the 2,600 low, so the low mid-September lows around 25.47, so $2,547 an ounce. It did have a bit of a look through that in mid-November and it's bounced. So I think an aggressive trade here, if you thought gold was going to go back up to the all-time highs, would be to be a buyer with stops underneath that low. So that low, 14th of November low, comes in around about $2,535 an ounce. So that for me is an aggressive trade. Perhaps the more relaxed trade or the more relaxed stop, if I'm trying to catch what I think might be the next big swing on gold, is to have a stop below 2,470. And those are the lows from back in August, okay, late August. So, we've got a bit of a mixed picture in terms of trend, but there's no denying, for me at least, the big trend is up. So I'd like to be a buyer. The only question is, where does my stop go? So having it perhaps at 24.50 is one idea to try and catch the next swing up. If we look on the shorter term chart, so this is the hourly chart, we have seen all this week the price of gold gaining. Since Thursday of last week, we saw the low on Thursday of last week. We've seen a really steady decline from those late October highs. So the price dropped from what? From about 27.90 down to 25.40. So not quite a 10% drop, but not far off it. And since then, we've seen the price recover. So again, a more aggressive trade in this time frame. Say I wanted to try and follow this trend higher in golds, is to buy into that trend. Again, the question is, where does my stop go? The closest I would want it is the other side of 25.80, which were the lows from early Monday of this week. So only a couple of days ago. So that's again a more shorter term trading idea. And for me, when it comes to trading, it is all about where does the stop go. I think the mistake too many people make, I mentioned it in another video, is either not trading with stop losses, so they hope the market goes up or down, but have nothing in place to manage their risk, or having stop losses so tight they just get taken out in the noise of the market. So a shorter term trading idea here is to be a buyer with stops perhaps at least the other side of 25.80. Let's say 25.60. And what I'm going to do, let's set that trade up. So what I'm going to do, I think perhaps it's been a bit sideways so far today. Let's say I'd like to be a buyer at 26.20. So if the market drops about $8 from where it is now, drops down to the lows of today, I want to be a buyer. So I'm going to put an order in to buy at 2,620. And I'm going to put a stop loss down at 2,560. So this is a short-term trade. Let's set that up. Right, I'm ready to go. So with my broker, I can trade directly off the TradingView chart. So I've set my order up. It's a limit order. I'm going to buy 26.20. I'm going to put a stop loss in at 25.60. And you can see now those levels highlighted on the chart. I only want to risk £120 in this example, so I'm trading 0.2. Again, a big benefit of this broker. You can trade smaller than with plenty of other brokers, so you don't need to take on a big level of risk. So that's it. I'm ready to go. The order's going to sit there at 26.20. If the market sells off, I'll get filled and my stop will be active at 25.60. So let's just click buy and send that through. That's it, the order's in. So whenever I look at my gold chart now, until that order's filled, I'll see the details there. I can also have a look at this panel down here. And if I choose orders, there is my order in to buy at 26.20 with the attached stop loss at 25.60. So we'll see if that gets filled. To find out details of who I trade with, to try the account out for yourself, I like it because it's simple, the spreads are tight, and I can trade, as you can see, direct through TradingView charts. Just go to bit.ly/David Trade and I'll put the link in the description to this video. Now, of course, we can't look at gold, I don't think, without looking at the US dollar, because so much of what happens with gold, also is affected by what happens with the dollar. And it has been an interesting time. If we take a look at the dollar index, so this is the dollar against a basket of different currencies, and we've seen a big run for the US dollar. Again, particularly after the election, after the US election, we've seen the market go from about 103.50 to above 107. So a sizable move in the dollar index. And this latest bit of the rally since the US election is one of the things that's put the pressure on the price of gold. So I think it's really interesting to see what happens up here with the dollar index. Going back to October last year, the old highs are in around about 107.30, 107.50. Let's use that as our general area. If we saw the dollar run out of steam at these levels, then that's something that can only help gold. I think the risk for gold in the short to medium term, if we see the dollar break out through these old highs, that does suggest we could see further dollar strength, which is going to put pressure on the price of gold. So again, I'm sure if you've traded gold a lot before, it always pays to keep an eye on what's going on with the US dollar. But if you're new to the gold market, it's always worth looking at this market as well to see what happens. It's been a fairly inconclusive week so far. Let's see what the next few weeks bring. If we go back to the gold chart and take a look at an RSI, so a relative strength index, so classic overbought, oversold indicator. This is the first time the RSI has been oversold on gold since September to October last year. So obviously nothing works all the time, but I think the fact that we have seen the RSI go oversold suggests just how big that slide in gold has been off those all-time highs. So again, that could give some reassurance for those who think, well, this is actually a buy the dip opportunity in gold. Let's see what happens. When it comes to targets, for me, the obvious one would be for a run up back to 27.90, the old all-time high for gold. More longer term, I think if we were to see that break, then a few people are talking about potentially $3,000 an ounce. Let's see. But let's also look at the downside here. And let's not forget, no one's got a crystal ball. So when does it start to look as if the trend for gold is in trouble? I would say that the big level is this bigger support I talked about when looking at the daily chart, around about $24.70, $2,470 an ounce. It was sort of near the old highs on the way up from April through to July. And I think if it slips back there, it does look like this latest leg of the trend is in trouble. And perhaps at best, we're in for some sideways trading for gold. So that's, for me, the level to watch on the downside. For now, the trend is still up. We are seeing previous big levels hold. We've had an oversold RSI. Let's see how the trade works out. I'll have a look at it, of course, in Friday's market update at 2:30 UK time. But it should be an interesting end to the year for gold. I've got my order in. Let's see if it gets filled. That's it for this quick update in gold. We'll take a look at it again in the regular live stream coming up this Friday. If you've got any questions or comments, just leave it in the comments down below. Like I say, to find more about me and the other stuff I do, just go to the website. There's a newsletter I send out free of charge every week. You can sign up for that. You can have a look in the description to try the broker that I use to link it in to TradingView. All works very seamlessly. But for now, till the next time, we'll leave things there. So until then, good luck with your trading.